Hey everyone, welcome back to Corporate Decoder, the place where we untangle the confusing world of corporate finance and reveal the juicy bits lurking within SEC filings. Today we are diving into Instil Bio Incorporated's latest quarterly report, and let me tell you there are some interesting revelations hidden within the numbers and the risks they are facing. So buckle up because we are about to decode it all. So this is Instil Bio Incorporated's quarterly report for the period ending the 30th of September 2025. Think of this as a regular checkup for the company where they tell us how they are doing financially and what challenges they might be up against. Before we jump into the details, if you appreciate getting straight insights from these dense corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we break down even more of these reports and discuss them live. Now let's get to it. Alright, let us look at the company's financial snapshot provided in their balance sheet. As of the 30th of September 2025, the company had total assets of about $211 million. Now compare that to the 31st of December 2024 when they had over $263 million in assets. That is a significant drop of about $52 million. A big reason for this change is that their marketable securities dropped from over $104 million to about $73 million. This means they likely sold off some investments. Also, their property, plant, and equipment saw a massive decrease from nearly $130 million to just $138,000. This is a huge shift, and it is likely related to their decision to sell their Tarzana facility as mentioned later. On the liabilities side, their total liabilities also decreased from about $94 million to just over $91 million. This decrease is mainly due to a drop in their operating lease liabilities, which went from over $1 million to essentially zero. Now let us talk about how the company is performing in terms of making money or losing money. In the 3 months ending the 30th of September 2025, Instil Bio Incorporated reported a net loss of about $13.6 million. This is actually better than the same period in 2024 when they lost nearly $23 million. However, looking at the bigger picture for the 9 months ending the 30th of September 2025, their net loss was about $63.2 million. This is slightly worse than the same period in 2024 when the net loss was close to $62.2 million. So while they are improving quarter over quarter this year, as a whole is showing a slightly larger loss. Their research and development expenses also increased quite a bit from about $10.7 million in the first 9 months of 2024 to over $21 million in the same period of 2025. This suggests they are really pushing forward with developing new therapies, which is good for long-term growth, but drains cash in the short term. Looking at their stockholders' equity, we can see the changes in the company's net worth. As of the 30th of September 2025, total stockholders' equity was around $120 million. This is down from nearly $169 million at the end of 2024. This decrease is mostly due to the net losses they incurred during these periods pulling down their accumulated deficit. However, they did raise some capital through an at-the-market offering selling about 185,000 shares and bringing in over $6.6 million, which helped offset some of the losses. Now for the cash for the 9 months ending the 30th of September 2025, Instil Bio Incorporated used about $29.5 million in cash for operations. This is actually an improvement from the same period in 2024 when they used over $45 million. This positive change is partly because they sold more marketable securities, bringing in about $17.6 million compared to about $40.9 million in the prior year, an indication they are liquidating some holdings. Their financing activities brought in over $7.2 million mainly from selling shares through their at-the-market program, which is a good sign they can still raise money when needed. Scroll notes to condensed consolidated financial statements. One organization and description of business Scroll Instil Bio Incorporated is a clinical stage biopharmaceutical company. This means they are not selling drugs yet but are working on developing them. Their main focus is on a product candidate called Accession -2510 or 2510, which is a type of antibody designed to fight solid tumor cancers. They also in-licensed other compounds from a company called Immunion Co. Biopharmaceuticals, meaning they got the rights to develop them further. This collaboration is key to their strategy. Scroll 2. Summary of significant accounting policies. Scroll they operate in one business segment. This means all their activities are focused on one core area, which is developing novel therapies. They also mention their investments are classified as available for sale, meaning they can sell them if needed. Importantly, they have no impairment losses on these investments so far. Scroll 3. Segment reporting. Scroll has mentioned they have only one operating segment. This simplifies how we look at their business because all their efforts are directed towards this single goal of developing new medical treatments. Scroll 4. Balance sheet components to scroll here, we see the details of their assets. Their property, plant, and equipment has a huge drop. This is likely tied to the sale of their Tarzana facility. As of the 30th of September 2025, they had about $112 million in assets related to this facility designated as assets held for sale. This is a big move and could unlock significant cash if the sale goes through. Fair value measurement. Scroll this section talks about how they value their assets and liabilities. Most of their short-term investments like money market funds and US Treasury bills are considered level 1 or level 2 assets, meaning their value is pretty clear based on market prices. Their contingent consideration or future unpredictable payments is a level 3 liability, meaning its value is based on more subjective estimates. Scroll 6. Financial instruments. Scroll this table shows their investments in US Treasury bills. As of the 30th of September 2025, they held about $77 million worth of these. They classify these as available for sale, indicating they can sell them if they need cash. Scroll 7. License and collaboration agreement with Immunionco. Scroll, this is a critical part of Instil Bio Incorporated's story. They paid $10 million up front for the rights to develop 2510 from Immunionco. Immunionco could get up to $2.1 billion more in milestone payments plus royalties if these drugs are successful. This means a lot of Instil Bio Incorporated's future potential is tied directly to this collaboration. They also mentioned paying $5 million for development costs, which was expensed, and another $5 million prepayment in August 2025 with $1.6 million still prepaid. Scroll 8, commitments and contingencies. Scroll here, we see their lease obligations. They lease office and lab space, but their lease costs have gone down. Notably, their Tarzana facility is leased to AstraZeneca, and they have an operating lease agreement. The other rental income from this lease was over $2.2 million for the quarter ending the 30th of September 2025, which is a significant revenue stream separate from their core drug development. They also took out an $85.6 million loan to refinance construction loans secured by the Tarzana property. Scroll 9. Equity. Scroll Instil Bio Incorporated has common stock, and they have been selling shares through an at-the-market program, raising about $6.6 million in the first 9 months of 2025. This is a way for them to sell shares directly into the market when the price is favorable. They have no preferred stock issued or outstanding. Scroll 10. Stock-based compensation. Scroll, they offer stock options to employees as part of their compensation. In the 3 months ending the 30th of September 2025, they recorded about $1.7 million in stock-based compensation expense. For the first 9 months of 2025, this cost was over $7 million. This is common in biotech and helps attract talent, but it does dilute existing shareholders. Scroll 11. Net loss per share. Scroll, their net loss per S-share for the quarter was $2.01, down from $3.54 in the same quarter last year. But for the 9-month period, it was $9.53 per S-share, which is slightly worse than $9.57 in the previous year. This means each share represents a slightly smaller piece of the company's overall value due to the losses. Scroll 12. Corporate restructuring plan. Scroll Instil Bio Incorporated has undergone significant restructuring. They closed their UK manufacturing facility and clinical trial operations, which led to workforce reductions. This restructuring and the decision to sell the Tarzana facility resulted in charges of over $16.6 million for the first 9 months of 2025, primarily in asset impairments. This restructuring is a clear sign they are trying to streamline operations and cut costs. This section really tells the story. They are in the early stages of developing drugs and expect to continue losing money for the foreseeable future. Their strategy hinges on their collaboration with Immunionco and the development of 2510. They are counting on this drug to succeed. This sentence from the risk factors section really sums up their biggest challenge. If 2510 does not pan out, their business is in serious trouble. They are also worried about competition from other companies developing similar drugs for cancer and the high cost of manufacturing biologics. This highlights their funding needs. As of the 30th of September 2025, they had about $83.4 million in cash and investments. They believe this will last them beyond 2026, but this estimate relies on selling their Tarzana facility and other assumptions. If they cannot raise more money, they might have to slow down or even stop their development plans. That is a big risk. This is where they lay out all the potential problems with developing their drugs. They admit they have no experience completing clinical trials and that the regulatory approval process is long, unpredictable, and costly. Immunionco is running trials in China for 2510, and it is uncertain if these trial results will be accepted by the FDA for approvals outside of China. This is a major hurdle for global development. This section is packed with potential problems. They acknowledge significant operating losses since they started and expect more losses for years. They have limited history and no approved products, which makes them a risky bet. Their success relies heavily on 2510, and if it fails or is significantly delayed, their business will be severely harmed. They also face intense competition from larger companies with more resources. Scroll conclusions scroll. So what is the verdict on Instil Bio Incorporated? Well, they are a highly speculative company. Their cash position is okay for now, but they are burning through it fast. Their future heavily depends on the success of 2510 and their collaboration with Immune & Co. The restructuring and the sale of the Tarzana facility show they are trying to become more efficient, but also highlight some financial strain. They are walking a tightrope, and a lot of things need to go right for them to succeed. The risks, especially around clinical trial success, regulatory approval, and funding, are considerable. Investors should be aware of these significant challenges. Alright, that is our deep dive into Instil Bio Incorporated's latest filing. What are your thoughts on their prospects and these numbers? Let us know in the comments below. If you found this breakdown helpful, give this video a like and subscribe for more corporate dissections. And don't forget to join our Discord community linked in the description for continued discussion. Thanks for watching, and we will see you in the next one.